All right, good afternoon, everybody. We should be live on YouTube as well. Of course, live in the Pro Desk. Yep, looks like we're good. Okay, cool. So markets obviously took another hit today, and SPY, as you can see, closed pretty much right on lows here. Nasdaq, the Qs also closing pretty much right on lows, and the IWM with a big candle closing on lows as well. So let's talk about what happened. Basically, futures were pretty quiet yesterday. The futures market was open, but didn't do too much. And then last night, things got crazy when rates started to tick higher again. So looking at the TLT, which is what we commonly look at, just easy to type up in the equities market to get a kind of quick view on what rates are doing. TLT down, bonds are down, so rates are up. So last night, futures rates started ticking higher, and that brought the futures down, and that continued today. So you can see gap down in the TLT and then sell off all day. Held this 140 level. I think it's just kind of a number. I guess it's a level from way back here, actually. This 140 going back a while here. But other than that, below 140, I mean, there's room for this to keep going. So I titled the video today, let's rate the market, just kind of like a pun on words with the keyword being rates, because that's really what we need to be paying attention to. And a lot of people, including myself, learned this, in a big way through the coronavirus crash. The bond market is, it's a much, much bigger market than the equity market. There's a lot more money involved there. So you got to pay attention. If the bond market's doing something, your standard finance professor, or at least one of mine, would always love to say the bond market's the canary in the coal mine. If the bond market's doing something, you got to pay attention because it's most likely going to affect the equity market. So we kind of just got to pay attention day to day. People want to say, what's the market going to do this year? What's the market going to do the first half of this year? And honestly, I think it's way too hard to say because obviously we're in interesting times with the Fed actually is going to raise interest rates. Derrick gave a great video about like the whole, the great rotation and kind of like the theme behind that. But it's interesting to see some of these big tech names. Microsoft had news today. Apple weak, closing on lows. Amazon held up okay, but has been extremely relatively weak in the big picture. Netflix been relatively weak and still weak today. Facebook, which is arguably the best value FANG name, weak. These chip names weak. These FANG names, they're such a big part. They're such a big weight of the S&P and obviously of the Nasdaq that it's just so hard to say what's going to happen in the bigger picture when we really just need to pay attention to a day-to-day basis of what these rates are doing and how these names are reacting to it. Because it doesn't really, like, at the end of the day, support is support and you got your levels and everything like that. But if bigger money is flowing in certain directions, then there's nothing you can really do about it. And, the market's going to bottom when the money finally turns in the right direction. So that being said, that's my little speech on, who really knows what the market's going to do or when it's going to bottom. All we can really do is look for bounces, and then whether that bounce turns into the bottom, I mean, that's just whether, that just depends on how good you are at trailing your entry, really. Because that's typically what we see. We either typically see, and I like it much better when it's an extension bottom and it's like a snapback. But there's really two ways that markets bottom. They either get extended and they snap back, or they get extended oversold and they kind of base out and curl up and curl out. Hopefully, ideally, we're looking at an extension bounce here. But again, extension can always become more extended. Markets can always stay rational for longer than you anticipate, obviously. So, we don't just blindly buy. We got to watch intraday signals. But the point I'm trying to make is, everyone, like, the market's in such an interesting place right now, and everyone is kind of like giving these big picture ideas. But, really it's just going to come down to the market's going to pivot and bounce at some point. Hopefully we get more extended and get better levels because, again, more extension provides usually a better snapback. So hopefully, we can get a gap down, get further extension, see further extension, and then we'll get that snapback because markets don't go straight down and they don't go straight up forever. In fact, bear market bounces tend to be the best. So we'll get that snapback, and then whether that snapback is just another snapback like this was right here, or whether it ends up being the bottom, we'll see. Does it happen at 5%? Does it happen at 8%? Do we finally get that 10% correction? Do we finally see the 200-day? Maybe. But so we'll see. But again, point I'm trying to make is we kind of just got to watch this market on a day-to-day basis. With rates doing what they're doing, accelerating to the upside like this, the 10 years at, I think I looked this afternoon, 1.87. 10-year definitely looks like it's going to 2. And what happens if that overshoots 2, right? So it's not necessarily that it goes to 2 and higher, but if this goes to 2 and higher in a quick way and TLT is parabolic to the downside, it's certainly going to affect the equities market and probably get us even further extended and a bit scary, which will be a good buying opportunity. But we'll see over time how the TLT trends, and then obviously watching VIX. If VIX still stays elevated, stays bid, which that's what VIX did today. This is always a good clue. I was shorting VIX earlier today, trying to wait for the market to bottom, and the market didn't bottom, and I got stopped out. But VIX really held its bid all day. As long as the VIX holds its bid, as long as the VIX trends higher, the market's gonna be volatile, right? Up and down, up and down. But the VIX can only remain elevated. The market can only remain volatile. Like the market, when VIX is elevated and gets higher and higher, the market needs to get more and more volatile. And if it doesn't, then VIX is going to collapse. And once VIX collapses, that's when you get the robots to start buying. You get your trend following exposure. It's like the exposure toggle, as they say. So basically, watching rates and watching VIX on a day-to-day basis is going to be really key. And this week, and I'm saying it now because we're extended right now. We're extended, but we closed on lows. So I think this week we're gonna get some type of nice snapback. Again, whether it's a 1 to 2 day trade or whether it's a 1 to 2 to whatever time trade, it's just gonna depend on trailing it. But we're probably gonna get a nice trade this week, it looks like, and we're usually pretty good at in these opportunities. We're usually pretty good at buying this, so I'm excited. But yeah, I mean that's my thoughts on the overall market. Really, you just gotta take it on a day-by-day basis, and rates is definitely the theme. There's no big bad news today or anything like that. It's just rates is moving everything. Rates are finally moving. I mean, financials, I guess just to mention financials, it's kind of surprising to me to see these banks. I just remembered I did not do my disclosure. I wonder if it counts if I do it in the middle or if I just messed everything up. All right, well, I'm going to do the disclosure anyway because I probably should. Nope. Okay. I am a member. My name Patrick Hawe. I'm a member, associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. These are my current positions. I just remembered that because I was going to talk about JP Morgan, and I was long JPM for a swing last week. And I'm on the prowl for swings as this market drifts lower in general, and it's not just like the NASDAQ is ripping higher while IWM drips lower. But the SPY, the Dow, the IWM, NASDAQ, while everything's drifting lower, this is when you got to start to be on the prowl for those kind of like bigger picture swings. So I'm on the prowl, and that reminded me because I was swing long JPM last week, and then their earnings report was pretty ugly, and I got stopped out and gave back a decent amount of P&L, not all of it, but a decent amount of P&L, and got stopped out on Friday, and I'm glad I did because this is just disgusting this day, and this is a great example of, extension can become further extension. You get a day 3, day 4 here. That's probably going to be a great buy. But that's reminded me of that because then Goldman came out this morning, and Goldman also had a miss. I mean, the numbers weren't terrible, but it's not great to see these banks missing, especially with an environment where we think interest rates can go higher. So it's kind of interesting. And I think that's what hurt the IWM today. And energy seems to really be the only thing left standing holding the IWM up. Because remember, a lot of the big positions in IWM too, like I think AMC is still the number one holding. Maybe not anymore, but I think AMC is the number one holding. So you got like AMC drifting down with, some of this other stuff. I remember Penn's probably a pretty big holding, Sunrun. These are all drifting down. So now that financials aren't helping the Russell, it's like basically only energy holding it up. And energy is kind of overcooked a bit. Again, not saying it needs to come down, but energy probably is due for a cool off. While I say that, I also agree that max pain for oil is definitely higher, and this is this looks like it's going parabolic. So, while it's overcooked and a bit extended, it could definitely keep going. This looks great. So yeah, those are my thoughts on the overall market and where things are going from here, which, basically who knows bigger pictures, but smaller picture this week, hopefully tomorrow, over the next day to 2, we extend lower and we get a nice snap back to like, I don't know. Like maybe 460 will probably be a good target for the snapback. It depends how far down we extend, honestly. Like Josh was saying, the bonds were moving last night in the futures. And I remember during the Corona crash, when bonds were moving crazy overnight too. And we would just get those, futures would be limit down. And bonds would just be ripping. So we'll see, what rates do tonight. And what kind of follow through we get tomorrow. But probably rates is your key thing to watch. So yeah, those are my thoughts overall. I do have to cut things short today at like 4:45 because I do this Notman VTF thing Tuesdays, like every other Tuesday at 5 o'clock to help guys that are doing their SIE and Series 57. So I have to cut things short at like 4:45, but definitely happy to take any questions, comments, concerns, or complaints that you guys have now. So I'll scroll up. You guys are making fun of me because I forgot to do the disclosure, but then I remembered. I didn't totally forget, so. TLT bounce. Yeah, I mean, I wouldn't look at technicals too much with bonds because when bonds really trend, I mean, they can trend in a serious way. It's like, I don't know, really. Like I mentioned, this 140 is a level from back here. But then other than that, you got a quick move. Not too much below, really. And I don't really like looking at levels with that anyway. Pat, how psychology of the gaps, which Derrick explained in his education videos, would change as we are approaching into the neutral market zone. Let me reread that. How psychology of gaps, which Derrick explains, change. I'm a little confused on what you mean because you're saying as we approach into a neutral market zone, which I would say if anything we're approaching out of the neutral zone back into the bearish zone. But your general questions on gap psychology, which today I think I mentioned it pretty early today of a possible gap and go. I mean, just keep it simple. SPY had a huge, really ugly day Thursday, and then Friday got fairly extended with your daily 80 May's at like 467. SPY got to 460, $7 to the downside. That's decent extension. And then bounced well off 460, which is a solid level, and closed well. So anyone that bought is probably going to hold after Friday, thinking you have your low, high, and then possibly higher low. And then today we gapped down, below this 460, and off the open. After that, you get your opening 1 to 2 minutes of shaky volatility. We didn't break above 460, and we were trading down. And you really didn't even need to wait 5 minutes to see this bearish candle to kind of just be able to recognize that this 460 was a big level. It was Friday's low. We're gapping below it. So people, shorts are trapped. It's just like kind of a max pain thing, which is what the market likes to do and what you want to try and figure out sometimes, like kind of guess what max pain is. But so, shorts probably, or, shorts may have bailed. Some shorts may have bailed. Longs probably kept them long, and then now it's gapping past their out. It just creates an environment for more selling than buying, both on the short side and the long side. So I guess that's my quick little thing on kind of gap psychology and how you can try to think about it versus like when you're gapping, it's, I don't know. I mean, that's one example. If you have any others, definitely feel free to ask, but that's kind of one example of how even just today you could have kind of recognized the gap and go to the downside situation. It's definitely not always perfect like that. I mean, this is like not a great example because it's too perfect, and I don't like perfect examples because the market's not perfect. But yeah. IWM still has a lot of air. Yeah, so this 210 level that I've been harping about, which is the yearly, weekly support, which again, we have not, this is not looking good. Look all the way back to, it gave it its first real, by it I mean the IWM, its first real volatility back after this must have been the Biden election, right? Yeah. So the post-election run, IWM came up to 210, broke through it, and then no matter what, even though it's gotten below 210, this weekly hasn't, I don't even know about daily. I'm not sure about daily, but the weekly hasn't closed below 210 in over a year, including back here, which was a one-day thing, which, again, it was just a daily. We flushed it on the daily 210, but we ended up closing at 212, and then that was the bottoming candle for IWM here. So this, is not looking good. I don't know how else to put it, really. And your basic, it's a range from 210 to 230, so that's a 20-point measured move. So that would give IWM a measured move down to like 190 or so. Would not be unrealistic. So that's IWM. IWM technicals not looking good. Yeah, energy probably should coil up. Yeah, like I agree, oil stocks are cheap, but again, things don't go straight up and straight down, right? But we'll see. I mean, oil is looking parabolic. Two questions. One, looking to see if my reasoning / thought process is correct. Bristol Myers, I got long on the pullback versus lows of 113. That's the daily. 113. Got stopped out by a few pennies and then it retraced back. Is my thought process good for the stop? And then you have a... Okay, so... 64. assume that was Thursday, right? Yeah. Okay, so on the pull. Okay, so if you're in general, you want to be buying on. If you're buying versus like a pivot out, you want to be buying on the way up when price action is on the way up. If you're newer to trading and you haven't been watching price action and charts and tape, then you'll learn through experience. But in my experience, if you are buying versus a pivot, you really want to be buying on the way up. If you're buying something on the way down and you're just like sticking a bid out in extension, you can't have an out because it's short-term extension, and that short-term extension can become more extended, and you're looking for that extension to correct itself, which extension always does correct itself. It's just a matter of whether it's through price or time. So if it sounds like what you did was in this down move, kind of just buy, not to talk you down or anything, but kind of buy randomly versus this out. And as you can see, it poked it and then came right back up, which this is a good example of something that's not perfect and how, the market's not perfect, and, you're top to buy versus support. And, if support is 50, I should buy at 50.01 and it'll hold. When the market's not a perfect thing, you got to try and like kind of learn these. It's not like games, but that's one of the ways people put it. It's just like these games the market plays. So again, if you're buying on the way down in extension, you can't really have an out because that extension can become further extended. It's not the end of the world that Bristol Myers broke this low by like a few pennies, because it shot right back up and traded well. You know what I mean? Like, big money doesn't care that this broke by a couple pennies. They're, overall on the daily chart, like, this looks great still. And in reality, by the way, technically this wouldn't even be a valid pivot. It's really just a bull flag, but it's a high and then a low, and you don't have your higher high. So one, you don't have your higher high, so it's not even really a valid pivot there. And, this low with this volume should probably be the real out that big money actually cares about. So again, in that extension, if you're buying versus a pivot, you want to be buying it back on the way up, which the way you could have done that here, in my opinion, would be recognize that 64, is a bit of a level. And again, usually these levels come around whole numbers or maybe a .50, like a whole or a half. But, recognize that 64, it got hot, it pulled back down for 1-2 days, and it got bid up off 64. That's where it's trying to hold, and now this ADMA is caught up to there. So 64 is the level. So again, either if you're buying this extension on the way down, you can't just randomly have it as an out here, because it doesn't really matter that it pokes that low. It's not the end of the world. When a level holds, by the way, it usually you want to see it close above it. That's why I think right now it's a big deal that the IWM is making it's closing below 210. Because again, just because IWM poked 210 below or before, on the daily chart, it closed above it, that level's still valid. It doesn't make that level invalid if it pokes it and then closes back above it. So what I think you could have done here is recognize that 64 is a bit of a level, and you get your flush here. And sometimes, like, these games, it's almost like the market is playing these games to stop retail out, right? Like when you guys are like, oh, the market's looking for my stop and it stopped me out. Honestly, like, that could have been what's happening here. It pokes this low, you get stopped out. Anyone else that's long against this out, which isn't really that valid of an out anyway, gets stopped out, and then it immediately shoots right back up over 64. So I think what you could have done here is just waited and been patient and recognized that 64 is really the level. And then once you see it shoot back up through 64, you can buy versus this low. Because again, that's buying on the way up, back up through a real level. You're buying on the way up. Price action is going up. It's not trading down. And then you have like a real pivot to play against. So I don't hate your trade, but I think that's what you could have done. That's what you can do in the future for yourself to avoid this happening where, again, you're buying, like, this is a great, like, again, I like the idea, but it's not super valid on the daily. So because of that, it's not a huge deal that it breaks it by 10 cents and then trades right back up. That 64 level is still valid. And clearly you can see that on the daily. It, still closed pretty well. So, yeah. Thoughts, and then FCX. Move stop up to 53. Yes. This had a positive. I know Derrick was saying there's an upgrade. I'm pretty sure it was a positive Barron's article, not an upgrade. Not that it's it's whatever. Who cares? But yes, I think you should do that. I agree with that out. I would be disappointed if I was long FCX, which I'm not, and I wish I was. This 43 is clearly a level that it's finally above. I would be pretty disappointed if this got back below 43, because this is trending nicely. You don't really want to see that 43 break. So yeah, I don't. Or yeah, I think you can move your stop up there. Nick putting up a picture of IWM, AMC's GSAT, really? This is by, so it looks like you sorted this by share size. If you can redo that and sort it by like market or like dollar value or market cap or something. Because like I see GSAT above AMC, but this GSAT is $1 stock. Whereas AMC is right below it, but AMC, I'm sure the dollar value there is bigger. Thoughts on Starbucks? Starbucks is a name that it's one of those names that you want to kind of just hold and own because, everyone loves their coffee. You ever see a start, it's always busy. That being said, great example of how extension can always become further extension. And if you're, you got to be real careful blindly buying this thing on the way down, especially when it lost 100. Which I guess it really just did that today. What I meant to say was this 105 level here. I don't know I don't know why really this is getting so beat up. If I'm forgetting something, I mean, I don't know. You got this weekly pivot at the low is 95.90, so basically 96. With this is kind of like a power bar too, and this low is 97 pretty much. I don't know. You can try 97, 96. Kind of like the 97 to 95 zone you can try. And then I don't know, 90. It's, it's a great name, but it's really, really ugly. I would be, I'd be careful. I'd wait for something like a strong intraday signal on that. Low quality coffee. I don't think low quality food stops Americans or human beings from consuming it necessarily. But yeah, I don't know. I mean, it's hard to say. I want to say it's a buy because it's so extended and the volume's picking up. But at the same time, it's not really, it looks like it could have another day or two or three. Even the volume's picking up, but it's I'm looking for that or something along those lines. This was probably earnings, so maybe not quite like that, but maybe even tomorrow. I don't know. It's really it's really extended. Maybe even tomorrow, but you got to have some type of intraday signal there. So that's Starbucks, which I don't know if that really helps, but it's hard to say, really. It looks awful. It's extended, but it looks awful. And it sucks to see that below 100, too. I would like to ask your idea for my trade. I shorted VIX today around 1 p.m. at price 1984. Formed on the 5-minute. I set a stop loss at the resistance, but stopped me out. Any improvement on the trade? You shorted at 1 p.m. at 1984. Okay. After the consolidation, I set the stop loss at resistance, but it stopped me out at the 1350 5-minute bar. So you're saying that you shorted it up here, like around here, and then it stopped you out here? Did you make money on... You should have made money on that trade then, at least, right? Okay. Well, so you're saying you set your stop at resistance, but I don't really know about that. I mean, $20 here, clear, poke 20 back down, and that ended up being the high of the day. Sometimes it's that simple. Sometimes it's not. Today it was, I guess, but VIX closed pretty well, so this, hopefully this keeps going and it gives us a better entry for a swing short. So you have your pivot here. What's this high? 85, 85. I don't know. I mean, this is, even if you really wanted to like squeeze a pivot out for yourself here, because this traded back up and then back down for a high or like a lower high and a lower low. This high is 85, this high is 85, this high is 87, and I'm seeing this high as 84. So if you're talking about like I don't know, I think you just kept your stop too tight. I like your trade. I just think you kept your stop too tight. But haven't booked the falling profit. Do you think I should change the stop loss or keep it at the shooting star high? I mean, if I were you, I probably would have kept my out at this high until this cleared this consolidation, and then you could have moved it to here. But again, even if you were, I'm not really sure why your out was here per se, because you could have done 85, but that didn't trigger. So I think you just kept your stop a little too tight. That's all. I like the trade though. Does Gap and Go use previous day's session, or could levels from back in time, and how long does the level? I don't know about necessarily only the previous day, but for the most part, yeah, it's the previous day. Maybe the past, like, if the past 2 to 3 days are consolidation in the same zone, and then you're gapping above that consolidation or below that consolidation. But anything more than a few days probably doesn't really matter too much there. Because it's like a quick thing. It's not something. It's catching people off guard. It's people are unprepared for it. It's like a quick thing, and people have to quickly change their positions and adjust. I remember studying this in school. Probably something good to pay attention to. I pay attention to so many like sentiment and positioning things already. Probably good to pay attention to, but if that's something you like, and you're seeing something to, notable out of that, definitely feel free to share it here for sure. It's interesting. I'm just looking at that graph. Seems like they don't like their coffee anymore. Do I have any YouTube questions? Sebastian, were you guys watching any individual stocks or had any game plans or trades into the open? What were we watching into the open? Oh, FCX. Probably the trade of the day today, Sebastian, was FCX. There was a positive Barron's article over the weekend, so FCX was gapping up this morning. And basically, I already kind of highlighted, but power move over this 43 level, which it finally cleared and then looked to pivot off the daily 80 MA. So we were watching FCX versus Friday's low, and that obviously, it had a great move, but actually did not close too well. But it still looks pretty good. That was probably the trade of the day off the open, or generally off the open anyway. And if anyone else has anything else that they remember, definitely let me know. I was kind of more just focused on the market as a whole rather than individual names. The not been training thing is it's pretty new. And it's just a quick little 10, 15 minute thing that, people come in, I take their attendance, and we make sure that they're actually studying and, not wasting their time. Because we want you guys to pass the test. Are you guys watching mRNA, Labu Bios? Not mRNA in particular. This stock's a whole mess. This stock's a mess. But Labu and Bios, yes, absolutely. We've been stalking XBI via Labu pretty closely for the last week or so, and definitely still stalking it. I was trying to pull out levels today, and it wasn't easy, but basically you got the levels I had mentioned were 94, which is from March of 2019, and then 89 from a little bit after that. So yes, definitely stalking it. Similar to, what was the name? Similar to Starbucks, I guess. Really, it's extended. You want to buy it because it's extended, but the extension just keeps getting worse and worse. You got these tiny little snapbacks, and then boom, snap 1 day snapback, and boom. But so those are the two levels to watch. 94, which is basically at today, so we'll see if we gap down tomorrow, and then 89. It's like 90 to 89. Maybe it goes to 90 and flushes 90. So yeah, definitely watching for a bounce soon, but hard to say exactly when it's coming. It's 4:50. I probably got to wrap this up. Looks like the questions are almost done though. More on the VIX. When the 12, when the 225 can't. Oops. When the 225 candle on the 15-minute doesn't close below 1941. Doesn't close below 1940. Doesn't close below the 1941 pivot. I think you're talking about this candle right here. So you're saying, I don't know, our candles are a little, honestly, our candles are a little bit different, it looks like. So you're saying 225 candle, but I have like a 230 and a 245 candle, so maybe our timing is a little off and that might affect the shape of our actual candles. But that being said, could you go long against the day's low? Uh, my answer is yes, but that's not really a trade I would take. It's just kind of like an intraday. Yes, I think yes. Um, Wait, so you mean like this candle? You're saying close. I don't think it even gets below the low here. 32. Oh, it does poke it. So you're saying because this candle didn't close below this low. Yeah, I don't hate that trade. I don't hate that trade. I probably wouldn't take it. Um, Basically similar to just shorting the market at this time of the day, and probably just because time of the day. I like the trade. You could I like it for sure. I probably wouldn't take it myself. Again, just because time of day. I'm not a fan of trading the last hour into the close. I find it harder than the middle of the day even, because just like closing flows kind of come out of nowhere and are kind of random. So I don't know. It's just not the best time of the day for me, in my personal experience. So yeah, I like the trade. It's the technical points that you're saying are definitely valid. Um, just careful with your time of day. That's all. Okay, cool. Looks like I'm through all the questions, and I gotta end this anyways. So yeah, we'll see how we gap tonight. We'll see what rates do. If the 10-year keeps ripping higher, we're probably looking at a gap down. Let's hope for a gap down, and let's hope for some scary extension. Ooh, extension, right? That's going to be a good buying opportunity. And looks like it's coming this week. So we'll see if it's tomorrow or the next day, but hopefully soon. Talk to you guys tomorrow.